Good afternoon. The next session is about digital boom, that's Latin America's digital infrastructure investment research. The panel today will examine the dynamics shaping Latin America's digital infrastructure sector, with special emphasis on AI investments. And to chair that, we have Richard Walker, who is a partner at Analysis. Thank you.
Thank you. Hi everybody. I think late session today, so we will have some more people filtering in, but if not, we can probably do this more as a roundtable session. If you have questions and things as we go, we can keep this as a discussion with those in the room. My name is Richard Morgan, I'm a partner at Analysis Mason. We're a global consultancy company focused on the technology, media and telecom space. We work with investors, operators and policymakers around the world. We're here this afternoon to discuss the surge in investment we're seeing in digital infrastructure in Latin America, with a particular focus on the data center sector. We've seen a wave recently of multi-billion dollar investments announced by hyperscalers and co-location players. I think this afternoon we'll be discussing what's driving some of that investment. Why now? Why Latin America? We'll also look into some of the enablers of that growth, energy, water, connectivity, supply chain, and how some of the operators here are mitigating constraints in those areas. And finally, we'll touch on the policy, regulatory environment, and the geopolitical backdrop, so that's including some of the recent policy discussions in Brazil, also the impact of the US policy environment, which has become a little bit more unpredictable lately. And also the flow of capital into the region, where that's coming from. So with that, we have a fantastic panel. I'll ask you to introduce yourself and then your presentation operator.
Sorry for that. My name is Victor. I'm replacing Alessandro in this event. He had an internal problem, and I'll try to do my best here to replace this discussion. I'm the Financial and Investment Director of Piemonte. Piemonte is the main investor of LA data centers. We are focused only in Brazil. We are the main decentralized platform in Brazil with 9 assets across 5 different states in Brazil. Our focus originally was mainly in connectivity, a very well-connected platform, serving what used to be unserved regions, but since the demand has been shifting towards build to scale, we are leveraging our existing platform to build to scale in adjacent lanes, leveraging on the connectivity and in the power infrastructure we have already built in those regions.
Could you tell you a little bit way better? I'm Marcus Payne, founder and CEO of Scala Data Centers. We are the leading platform in LATAM today with around 200 megawatts in bookings. We control 1.45 gigawatts of IT capacity to deploy cloud workloads for hyperscalers, completely focused on hyperscalers. And we have a total footprint considering the Scala IC as well, which big news for today. It was a coincidence, but a very happy coincidence. This morning was published on the official journal from the federal government. The connection approval for Scala IC with 5 gigawatts of total capacity, which brings our portfolio close to 8 gigawatts. We founded the company in the middle of the pandemic. The decision to make investment in LATAM was made in December 2019. Needless to say that the underwriting case was not considered pandemic, not the challenges from the pandemic, but also the boost on the demand. We founded the company back in April, we just completed 5 years. We started the company with 17 megawatts by acquiring 2 premium data center assets from EOL that I had a previous history running the company a few years before launching Scala. And during the pandemic, we decided to shift completely the business model from a colocation company that would focus a piece on enterprise to increase on hyperscale. Why on hyperscale demand were not the size that we see more developed markets? And so we made a brave decision of shifting from co-location to single-tenant development, which would force us to work not with a single location, but in campuses, where we could offer an avenue to grow for growth to our customers. 100% sustainable, 100% of our energy is green, renewable, based on renewables since day one. We've been the first company in Latin America to get that amount of green energy, and the first in America to achieve carbon neutrality the same year. We focus today basically on hyperscalers, as I said, and seeing the market into two different big groups of demand. One that is for local demand, everything their local customers will require in Latin America to develop and to deploy their own locations and to support their local customers. And the Scala IC, which is our project to support international workloads, which will require, of course, data privacy regulation that will support international workloads to be run from foreign countries in Brazil. We are very excited with this. I think it's the first time. I'm a serial entrepreneur. I have more than 25 years building companies in Latin America. It is the first time that I see a combination of the government, the legislators, and the industry, both the operators and the investors looking in the same direction, where we can clearly see Brazil and Latin America as a global hub for AI. So excited to be here. Pleasure to be with you guys.
Very incredible. So my name is David. I'm CEO of HPC Data. We are basically taking Brazil as a role model for Paraguay. So we are developing the Paraguay market mainly for AI, only for AI. So we are focused on AI factories and high density compute and sustainable energy. So we are definitely just at the beginning compared to those big guys, but definitely Paraguay is the younger brother of Brazil. At the moment, having most of its energy going to Brazil, and of course want to leverage its own resources from the high demand, 100% green, of course, locally. So, of course, we have several similar challenges, and we share similar visions, so very interesting to discuss.
Thank you. So we're seeing a lot of investment now announced in Latin America. Brazil and Sao Paulo has been the main hub for some time. What's led to the demand in Brazil, and what are you seeing as the next wave of growth in the region? What's making Latin America so attractive for investment?
Latin America is a big region. If you consider only Brazil, we're the seventh largest population in the world, the ninth largest economy. I know that the number will look like crazy, but we have more than 400 million devices turning on as we speak here. An average of 2.12 per citizen in the country. A lot of our services are well developed into the mobile applications, like the finance sector in Brazil is very, very well developed. One of the leaders in the world, basically, when you use innovation as a criteria to compare that, a lot of services from the government are already digitalized. So it's a big consumption market. When you take like social media, for example, Facebook, WhatsApp, TikTok, YouTube, Brazil is going to be the first and third largest customer market for all these companies. And only, if you take just social media as an example, that will give you how playing catch up is the strategy to grow in Latin America. When you combine social media, they have between 15 to 70% of their revenues coming from Brazil. Only 1% of their infrastructure is deployed in Brazil. So only by playing catch up, and this was the thesis when we decided to launch Scala. When you compare and you compare economic productivity, population density, infrastructure availability, you can find metrics that allows you to compare countries and how developed the infrastructure are in those countries. In 2019, when we decided to launch Scala and we approved the investment, it was a starting investment of $500 million. We invested so far $2.5 billion in the region so far. We have commitments for another 3. Brazil, Latin America, Brazil was 1/8 of Europe in terms of global ramps and infrastructure available for that, and 1/70 of the United States. So only by playing catch up, we saw a big market to explore. But then you bring the pandemic as a catalyst for all companies and all citizens understand there is no life without digital anymore, there is no progress for any company without digital, and we saw an acceleration of that combined with 3 factors. One, latency, so the applications will require lower latency for more mature and more developed, more modern applications. You have an issue with instability of the currency, so customers are not able to pay USD anymore, they want to pay local currency, therefore the hyperscalers need to have local balance sheets, which would shift their investments towards the countries where they have big revenues coming from, and you have the data privacy and the data sovereignty aspects. When you add to that a factor that the North America grid was not ready for all the demand, a significant movement in pushing workloads that were serving Latin America from the United States also took place. And then these markets that were basically in the past perceived as tier 3, tier 4 markets, some of them like São Paulo, Santiago, they've been promoted, Querétaro, they've been promoted to tier 1 to tier 2 markets. So that is driving the demand for us. I mean, we still have catch up to play up to 3 gigawatts. Beyond that is all about AI, which is, and then we have this big opportunity in countries like Brazil, Uruguay, Chile, to deploy infrastructure that is widely available to support more than the local demand, which will enable us to be global hubs for AI development.
Thanks. And Victor, you're also very focused on the Brazil market. Has anything to add to what makes it an attractive market from your perspective, and also commenting on the fact that you have perhaps a more distributed presence across other parts of Brazil?
Yeah, I think Marcos had said almost everything here, like I agree completely with everything he said. I would just add that Brazil today has a lot of available power in the transmission, like more than 10 gigawatts of transmission power are available today. The generation is much more than that. So Brazil can not only just serve the local demand, but also, of course, solving data privacy, regulatory issues, can serve other countries for using its power. And one thing that LATAM is focusing on, and we think can bring a lot of investments in Brazil. Brazil is huge as a country. A lot of unserved places yet. We have developed São Paulo as a hub for Latin America. Rio and Fortaleza are the 2 second states in cities that is bringing a lot of investments. For Brazil to serve the entire country, we see a lot of potential opportunities and investments, especially for low latency applications that we need to develop the technology in the country.
Still there's no correction. There's no getting on the table because I just took 5 minutes in the morning, so it's only 5 now. Oh, you need to approve that.
So the Paraguay market is a little different. In general, most of the traffic is local. So 70% of the traffic is really local. The demand is not really high. You can imagine Paraguay is actually just one big city, you could call from a digital perspective, and therefore it's a little bit about something else. We're talking about global demand, we're talking about green energy, we're talking about scalability, and also AI training and latency non-sensitive applications. And for that, the Paraguay market is pretty good. So it's less about the demand rather than more the resources contributing to the world's demand, I would say, the global demand. Of course, we are not so far away from Brazil, and we think that we can take definitely demand from US very serious, and it really depends on the use cases. So demand is something, of course, that is a big challenge. Resources, however, is there. And yeah, so
What Victor is completely right when he speaks about the dimension of the country, the dimension of the region. The way I see it, and that's why we like to see platforms that are somehow complementary to each other. You're going to see the core markets, the places for core development, gigawatts of development will be 3, 4, 5 top in Latin America. But then you have to distribute in the world. So when you consider that training won't require latency, you can work with 200 to 150 milliseconds of latency for training with no problem. Latency is roughly 30% of the AI workloads. The other 70% is about inference. The inference, you can layer the inferencing workloads as well in 3 to 4. Then let's focus on only 2. You will require the very low latency that will run stuff like autonomous automation, autonomous applications, autonomous cars, surgery, telemedicine, etc. That will require latency between 20 to 50 milliseconds. This is going to happen on the edge, and some portion of this will happen on the far edge. We are talking here about small deployments, 100 to 150 kilowatts, that will be located mostly under the towers. It's where you are going to capture, where the data is being acquired, and the information is being collected, and the training models will be distributed over this. Then you have the edge, that will be the regional edge that will consolidate, where LATAM has this big presence. And then you can see like the cities or these places where this demand will be required, they will follow much similar to the way that the towers and the mobile infrastructure is deployed, where you have thousands of towers on the far edge, and you have regional places where you are going to collapse them. This will require latencies that go north between 50 to 90 milliseconds, and everything else doesn't matter what. So when you think about tiering the market and you look at without AI, international AI, Latin American market can reach up to 8 gigawatts in 10 years. Out of this 8 gigawatts, you're going to see roughly 30% of that distributed and 70% of that concentrated. If you bring AI international workloads, that is going to come to the core. There is no AI international workloads running on the edge. It doesn't make sense to go to places where the climate is more challenging, where you have higher PUEs, because it will be all about lower total cost of ownership. So when you compare, for example, Paraguay or Rio Grande do Sul with Fortaleza, we're talking about PUEs of 170 to 190 with 1.5, 1.54. That adds to the total cost of ownership roughly 20% more on the cost of power. Even if you have a low tariff for power, you need to sell the PUE on top of that. So when you add that, and you add sanitization, etc., that's why our view on this that you are going to São Paulo is a core market, Querétaro will be a core market, Santiago will be a core market, and then you have within the states, assuming that basically all hyperscale works with 3 availability zones for each region, you are going to find within 200 milliseconds round cycle for a round trip for 3 locations. That's why you see the region of following São Paulo, you have Campinas, you have Jundiaí, you have Hortolândia, you have Sumaré, which creates that. Rio de Janeiro will be certainly another location similar to São Paulo to offer for local workloads. Rio Grande do Sul the same, probably Fortaleza, Recife the same. But you are going to have the edge. In the far edge, we are not even talking about the edge, which will be hundreds or thousands of small data centers distributed on the geography. If you consider that the shift to 4G, to 5G, and then to 6G requires 3 to 5 times more towers, and we have on Digital Bridge a lot of tower business, so we are very, very acquainted with this subject. 3 to 5 times more. We project that at least 10% of this points of presence will require a small server, because the software-defined network will be required to run that. So you do the math, 100,000 towers today, multiplied to 3 to 5, we are talking about 300 to 500, 10% of that. We are talking about 30,000 small data centers that we need to be distributed in a geography of the size of Brazil.
Just to complement that, this is not something very far, because we see, since we are a distributed platform and we serve some clients that need these low latency requirements, we've seen already requests to go all over Brazil. As you said, small deployments 20 small data centers at once to be built only for the next 3 to 5 years. So I agree, we will see a lot of type of deployments in Brazil, cores, AI, local, domestic consumption, international consumption, also edge and far-edge deployments. It's interesting.
We've already talked quite a lot about energy, the fact there's a lot available in Brazil, even more so in Paraguay in terms of the surplus in the country. Are you seeing any constraints from power supply, either in terms of having generation replication, the grid capacity, the stability? Are there any potential issues you see down the road in terms of power to fuel this growth?
See, especially for Brazil to consideration, the grid was oversized back in the 70s. So the Brazilian planning back in time under the government assumed that the south part of the country and the southeast of the country would grow basically at the same pace, which didn't happen. So you have a lot of transmission going to the south part of the country. They're not being utilized because there is no demand. And what happened is with the renewables, when you go away of the hydro, which is 80% of the Brazilian matrix, but we had a lot of developments in renewable energy sourcing, solar or wind. You have that concentrated in the northeast part of the country. So today what you have basically, and this is something to address it, you have a lot of energy generation being deployed in northeast part of the country, but you don't have the transmission ready to bring all that power to the south part of the country. So you have two options here. First, you build new source of generation in the south part of the country, or you invest in the transmission to bring the power that is already available here. The power that is already available in the northeast part of the country is the same way, that the transmission was oversized for the south part of the country, the generation was oversized for the northeast part of the country. So you have more generation, more power being generated in the northeast than you have consumers to take. So this is something that Brazil is working. The beauty of Brazil is that the grid is all interconnected. So you can leverage and distribute wellness and investment over the country, because you can have, let's give an example for Scala IC. We are going to consume, if we have international data, to be deployed in Brazil, 5 gigawatts. That 5 gigawatts can be produced and generated in whatever state in the country as long as the transmission are interconnected. And from a revenue perspective for the states, the ICMS, which is the tax that go over power in Brazil, is 0.5% paid where the power is consumed and 0.5% paid where the power is generated. So it's a way that you can involve several states distributing wealth in the country. So that's the beauty of the Brazilian model, which is way better than the North American, for example, where the grid is concentrated in small companies, in a fewer number of companies, and not regulated as a single entity, which brings challenges like you have Dominion. If Dominion doesn't invest in Virginia, you have no power in Virginia. It's different than the scale where you can bring the whole system to that. So I think to you that this is the biggest challenge for Brazil, which is about balancing how much power we have generated and where the transmission is available, because we have both in excess. We have more transmission than we need, and we have more generation than we need. The issue is where does this and how to reach?
Victor, anything to add to that? Is the availability of power also having an impact on the way you're choosing to locate it?
I agree completely. This effect brings the transmission construction timeline challenges to our transmission product. Even if you have a lot of power being generated, a very good infrastructure built, depending on the region, it takes a while to bring the power there. That line cannot manage that line needs. I think that this is the country is addressing already, something that we're already discussing. But as Marcus said,
the scale of the demand allows you to do things to address that is not just dependable on the country or government investors. I'll give you an example. For Tamboré, we have a campus in Tamboré that is for 450 megawatts of IT power. Today it pledged to a gigawatt. We build the transmission ourselves, and then we donate the transmission to the regulator. Because if you were to wait, the government investment on that and all the bureaucracy would take 4 years. We did that in 18 months. So when you have scale for 400 megawatts, 500 megawatts, you are able to include the investment in the transmission and bring that to your own case, and then you can donate that back to the operator, and you are going to get a discount over the year. But you need to be very cautious about making this type of investment because they are going to dilute for 20 to 50 years.
So I think that strategy is something which is not just more beneficial, but maybe sometimes it's even necessary. There is no other way around building your own infrastructure, and even if it means to build your own substations and things like that. So for us, it's about an energy game, and we are aware of that. And that's where we started very young, when AI was not there. Of course, and there were no other consumers, so we had to find consumers, and of course the first consumers were the computing, which computing needed was the money. So we started with that, and now since AI is growing, we see that there is potential. And one thing I wanted to add about the inference part, we always think about the network layer, how much latency is there. If we imagine the whole time of the application really running and loading, there is it's really a short part or a small percentage of the latency really actual physical network. That's actually what happens, and of course it is important, but not as important, and the use cases will distribute. But let's go to the other topic regarding the challenges with grid. Of course, there is a challenge. For us, it's of course everything is government owned in the sense of the grid. So on one side, it's good. We have very low pricing and very fixed pricing. So we have concentrated power rates. So it's that is a really critical part. But on the other hand, of course, we deal with some public entities, which take a lot of time, and we overcome that challenge by also investing ourselves a lot, and that's the beauty in it. If the investment is big enough, the substation grid infrastructure investment is relatively small in comparison to the whole project. So that's definitely something. On the other hand, the challenges include bringing all these players together, working on things like policies and data protection and things like that. But ultimately, everything, and I can completely agree for Paraguay 2, that's the first time when public, private, everybody is looking in the same direction with AI, specifically because they see it's disrupting not only the data center industry, but every other sector too. So they want to put themselves into a position, so yeah.
If we go to move on to other aspects, including the supply chain. So I think you've got a very different situation in Paraguay, which is a very greenfield market. Maybe we start with that, and it'd be great to hear then how Brazil is going to scale up to these multi-gigawatts projects that are now planned.
Yeah, very good. So our approach is a little bit different. We call ourselves a really remote place because we are looking from a global angle, right? We're not looking from a local angle, near-shore angle. So that means everything is prefabricated. What we heard earlier in some sessions, we do everything prefabricated and in a sense that everything is scalable and also exchangeable, and we don't rely on local work being done so much or expertise. So if you imagine the Paraguayan market is the biggest data center, I think, is 3 megawatts, which is like ridiculous. It's like a pilot concept, right? So that means there is expertise, but not enough. So we take that approach of modular, and we see that is the way forward.
One thing that when we are talking about this magnitude project, this is a big noise game. So it's the world where the companies produce order is everything. So time to market is everything for customers. And you need to consider that hyperscalers, they have their own self-development program. And so when we are fighting for a home, we're not fighting with the other colocation company. We are fighting with their own capabilities of self-development. And they have access to cheaper capital than the industry. They have more time to plan because they have the data to project where they are going to be and how much they are going to need. So it's almost an unfair battle. Where the colocation industry will be considered when basically they fail to develop on their own land because shit happens, especially when they don't have the local knowledge for emerging markets. One thing is to play in Virginia, the other thing is to sit in Virginia and try to play in Paraguay, and try to play in Brazil and Colombia to deal with the regulation of Chile, for example. So we have several histories of hyperscalers failing to self-develop, then they will fall into quota. But they will fall into quota not only because the industry or the companies, they have access to power and energy, because this thing happens to them. It's about having ready-to-go capacity or capacity that you can commit to a certain date with risks that are very well controlled. So at Scala, for example, we played this game of having our inventory ready to go. So we invested. When we started this, the hyperscale customers were ready in the region, but the hyperscale demand were there. Data centers were 2 to 3 megawatts. The first one that we sold was 10 megawatts in a single building. The last one is 44 megawatts in a single building. Densities grow up from 5 kilowatts per rack to 70 kilowatts per rack. Now we are going to 130 to 170. So if you wait for demand to come, then you are going to combine with your vendors the path to deliver. Then you are going to deploy your orders once your customers are in on the car. You are going to take 2 years to deliver. That's not acceptable for big scale. So you need to deploy capital in advance, and deploying capital in advance, building everything, waiting for a customer is an act of madness. No serious company or investor will allow that to happen. But you need to make sure that you have control over pieces that are going to be deployed together. So give an example. One is the modular design. So when you have prefabricated industrialized design, you can shrink the schedules you can shorten the schedules by 50 to 60%. By leveraging a controlled environment that can produce for you everything that is gray area to be deployed in the sites while you get permits, while you get information, while you get access. The second is having an inventory of long lead equipment that allow you to commit to certain dates. So if you want an example, we have more than 200 generators bought and delivered to Scala. So when I go to a customer, I say that it is 4 months of procurement sessions, and I already have the asset ready to go. So I don't have the building, but I have the land, I have the power, I have the birds, I have generators, I have the cheaters, I have the design. So when you compare that, you are de-risking their perception of deploying. So that will lead us to a place where we need more capital available and more financing solutions from vendors to shift the demand to before the order is made. Because if we wait, all the companies that are built into order, they are failing. That's why you see so many inventors in the market that are not anything more than a real estate company with access to power and land. Oh, I'm a data center company. Count on me. We will be there forever, my friend, because they are not a data center company. To be a data center company, you need to have operational capability, you need to have design that are ready to go, you need to have teams that are ready to deploy equipment the next day. This is about playing at this level of scale. It's not 2 to 3 megawatts a month.
Yeah, one thing I want to add a little bit of other color. So we are seeing the hyperscale market right on the last whatever. And as you mentioned, when you started, the hyperscale demand was not there. And I'm very convinced that's what our vision is about, is the AI factory demand is not there, but it will come. And it is a different market. It is not a hyperscaling market. It is not an AI cloud of the hyperscaling market. It is an enterprise-driven AI market. And it is different. It is relying on NVIDIA ecosystem, which is expanding. in a sense, and it is not driven by proprietary designs of an AI, of AWS or whatever. And then we are opening the market, and that's what we see. We are a small player, so we can compete. We cannot afford like having 10, 20 million of stock. No, we can't. But we are, if we partner in an ecosystem and for AI enterprise, we don't need like a lot of companies, and I think there is a new market coming up. A lot of enterprises are moving into a direction, and they will not necessarily commit to like hyperscale. So I think that is a new market which is changing, and they're looking at cost, and this is something we think we have very low OpEx. We are in the free trade zone. We have 3 or 4 cents of electricity rate. So how can you really compete with that? We are with a prefabricated solution. And we are constantly focusing our mission to drive costs down for AI specifically, because we don't have all this legacy. I call it legacy because we are working in an accelerated computing age. We are not serving the generic computing. So this is legacy for us. What do I mean by that specifically? It's, for example, the cooling part. We don't think that the next few years is actually necessary, and I think this is a really critical thing where sometimes could be I think is a little bit wrong, but air cooled is something which will diminish in some sense, and therefore we can build a lot on new architectures and ultimately lead a new vision and a new industry, and this is AI. So that's something which is new and is not there yet, but yeah.
I think we can move on to the financing of data centers and where the capital is coming from for all of these developments. So Victor Piemonte is a Brazilian-based fund, but you also have US investments into it there, I understand. How do you see the landscape of capital to fund all of these data centers in the region, both in terms of equity and debt?
In these past years, so I would say as of today, I would divide the equity and the debt portion of the capital structure, being the equity coming from abroad. Most of the investors are international investors, and we should agree to we have both the sides of the cap table as well. And the financing, the debt portion, specifically in Brazil, these past few years being allocated by the local banks. The local banks are very active in providing finance for developments. LA, as of today, is using a lot of corporate ventures to finance, but we're seeing a shift on more like asset kind of move. And we started a lot of discussions now with the international banks that want to try to bring these new financing structures more sophisticated and with more flexibility to pursue. I think we have a regulatory tax assumptions to assess that, if we can bring those investments directly from the US, for example. But I see the financial market, specifically the US financial market, being more active, at least in Brazil, where we have the presence.
Yeah, I agree with you. I think the equity portion will be always big companies, and we don't see local players with the size. It's not for hyperscale companies, maybe for regional companies, and etc. You can see local capital, venture capital, private equity working on that. But I don't see that for big guys. Second, it's been a good shift. 5 years ago when we started, and we launched our first adventure, all international banks. The second one, we were able to bring 20 to 40% local banks. And the third and fourth, 100% local banks. So the educational market, showing the stability of the revenues, reducing the risk by shutting down the billing happening, which is construction risk is out of the game, operation risks are out of the game, etc. open the doors for this. So we now see more companies coming to the space, leveraging that, which is very helpful. But I would say to you that the key for this is to pretend that you are not global. So for a company of the size, it's not imperative to have USD denominated revenues, assuming that we have, it's almost a global company on the rosy boat. Because we have USD revenues, we have AAA customers on the other side, we have long-term commitments for take-or-pay contracts, both in the space and power. So if you go to the market to finance this in local currency, you are completely damaged enough. It won't happen. So I'll tell you the first challenge, and this is where I think the enterprise and the hyperscale thesis, they part ways, because you won't have local enterprise companies, doesn't matter how big they are, paying USD. They are going to sign local contracts in local currency. But you have the hyperscale, especially after the inflation in US touching to the 10%, we're not even. I was born into inflation. I built several companies into inflation. So we are used to inflation. But the stable markets, they are not. So all of them panicked, and they understood that it's better to have USD contracts even in emerging markets than having local currency in the challenges of dealing with currency fluctuation. So if you are a USD company, if you are a local company with USD revenues and global customers, I'll take you that you won't face challenges on financing our platform. We've been raising an average of $500 million per semester. With this combination of international equity plus local funding. So the demand is there, the financing value is there. Of course, the challenge is how to pay the extra costs with higher performance. So I was sitting on board of other companies. We approved deals in Europe and North America between 9 to 12% yields on average. And we discussed with specifics up to 7%. I don't approve anything in Brazil, Latin America under 15%, because we need to pay the extra cost of the money, 200 to 300 bips, and we need to pay the discount on the valuation for being a Latin American market. So that drives us to deliver more performance, which is good. It keeps us healthy and competitive.
Yeah, I agree with you, and we are also USD based, and you have to be global. All our demand is global, and I think that's the only strategy also in Paraguay to really show that we are serious, to be honest, because of course we are the first mover in AI, in the computing, in the data center business, in that scale, and we are also from an investment point of view, this is one of the largest projects in Paraguay. So everything is very, very new. So we are also more in the role of convincing global investors about Paraguay rather than our project ourselves. So our project is more or less a no-brainer for Paraguay, but it's in the global scale. It's about why Paraguay, and this is a lot of education we do, and we provide. We see that there is, and they call themselves hidden champion, because there is lots of resources, and the structure is really like very pro entrepreneur. So that's a good part. So financing, and one thing to add about the financing is we also see a lot of sustainability investments. So there are a lot of funds who are very interested in developing or underdeveloped markets for green energy. And we see ourselves more as an energy company than anything else, because what our core game is about, we need to deploy all the infrastructure in a large scale. Ultimately, if we should look at the density of tomorrow, it will be 1 megawatt per rack, for example. Then we see, okay, how big is a data center? Let's say 100 racks. That's nothing for building a substation and things like that. That's like from all of that point of view, we see ourselves really more as an energy provider. And as AI is getting more and more commoditized, and especially in the AI training game. So we see that this is a huge shift in new industry.
Thank you. So we're going to have to close very shortly. Time for a question or two from the room, if anyone had anything they'd like to ask. Perhaps not. I think we are really up to time anyway. We've not had time to get into a discussion around policy, and there's some very interesting things happening in that space. So if you'd like to know more, please do come and speak to the panelists afterwards. But yeah, we'll join the panelists for the discussion.